Welcome back to QAV Australia, Tony. 8:48, recording this the 2nd of December 2025, nearly the end of the year again, Tony. It's school holidays in a week. Chrissy and I, we barely survived the last Christmas school holidays. How can it be Christmas school holidays again already?
I know, it's amazing, isn't it?
All right. You want to do your pulled pork, Tony? Who is it?
Yes. Metro Mining piqued my interest. They're on the buy list. They're a bauxite miner, explorer and exporter. They're based up on the western coast of Cape York in Queensland, about 100 k's north of Weipa, in a place called the Kynaston River. Their one and only project, they trumpeted as their flagship project, is the Bauxite Hills Mine. Very imaginative naming convention there, but it covers two tenements, the Bauxite Hills and Kynaston River. Interesting process when they mine bauxite. They dig it out of the ground, and apparently it occurs pretty close to the surface, at least in Weipa, so it's not that hard to dig up. They can do it with some diggers and graders. Then they put it through a mechanical sieve, they call it a wobbler, which shakes out the dirt and leaves the larger chunks of bauxite. Then they put it in tugs and barges and sent it offshore about 10 nautical miles to a platform they've built out in the ocean, which then can load ocean-going cargo vessels, which are bound for mainly China. They say Asia Pacific, but I think it's all going to China pretty much. So it's a fairly simple business model. It's been going since 2018. And apart from that, they're also drilling some holes and doing exploration work nearby in other tenements in Cape York so they can expand the mine over time. They're operating in a fairly traditional First Nations area, and they're proud to say that 35% of their workforce is from the local area, made up of First Nations employees, so that was good. A couple of other things which I thought was interesting about this particular type of mining, because it's in Weipa and because it's close to the surface and involves creeks and oceans, they only mine for about 9 months of the year, from April to December. So they'll be closing down around now for the wet season, which becomes too rough and too wet, too rainy to be able to carry out their work properly. So I thought that was interesting. They've done some work around that because one of the side effects of ongoing wet seasons is the silt deposits in the Kynaston River build up, and they can't get even their tugs down it, so they have to do some work on that. And about a year ago, they raised some money and they did a big upgrade, partly to desilt the river, partly to upgrade their loading terminal, and to buy some new ships. So they're starting to see the benefits of that this year, and the share prices have reacted accordingly. But bauxite is a commodity, and I found it hard to get a 5-year monthly chart for the bauxite price, and in particular for the Australian bauxite price, or as I think it's called, the APAC, Asia Pacific bauxite price, because there are bauxite mines all over the world and they trade at different prices. We tend to get tied to a lower grade bauxite, which only gets used in places like China when they've run out of their own higher grade stuff locally. And apparently that's happening in China because the need for aluminium's been increasing reasonably strongly because of aluminium for use in EVs and in the construction of solar panels. So there's certainly a growth profile for aluminium and therefore for bauxite. I did think that maybe we could use the alumina 5-year monthly chart as the commodity for this company, but I asked ChatGPT and they said that there was only a weak correlation between bauxite and alumina. So I don't think we can. And noting that alumina is also a Josephine, and what I did use ChatGPT for was to try and dummy up a 5-year monthly bauxite chart, which ChatGPT did, pointing out that there are a lot of data smoothing and interpretations of the data in it. But I then compared it to a graph that the company Metro Mining produces themselves, which was in their AGM pack, which showed the same thing. Basically, towards the mid to end of last year, 2024, that is, bauxite went through a very strong price increase. It almost pretty much doubled. And that was due to the mines in Africa, in Guinea, coming off the boil. And what happened to Guinea was that there was a coup and a military government came in and they closed down a lot of the mines, and it seemed to be the ones, something like 27%, and it seemed to be the ones that wouldn't play ball about cutting them in. So bit of ructions in Guinea caused the price to spike. That's been smoothed over now, and Guinea's is ramping back up to full production, which means the bauxite price is back to its longer-term trend. But if you use the ChatGPT sort of interpolated graph or you use Metro Mining Zone graph, it looks like bauxite is probably a Josephine, may even be a sell, but is probably a Josephine. So bear that in mind when I talk about the company. Even though this company is producing good results, the underlying commodity is gone back to its long-term trend. What else can I say about them? A couple of articles I thought were good about them, both in the Fin. There was one which was back in October last year, so a bit over 12 months ago, and it says the ASX micro miner Metro Mining is rocketing on the next commodity boom. Demand for aluminium is surging thanks to its role in the energy transition and its use in technology such as wind turbines and batteries, which has prompted Chinese smelters to pump out record volumes of the finished metal. Pundits compared the dynamic to the iron ore market between 2005 and 2015, when Chinese demand overwhelmed the country's ability to supply the steelmaking ingredient from its own mines. Excuse me. Bauxite is the new iron ore, one analyst said. The impediments to getting new supply on the market are akin to iron ore because of the logistics requirements. Bauxite is a bulk commodity, so you need rail, ports and other things which can take a long time to build. A small crop of Australian producers are profiting from the supply squeeze, with the price of bauxite shipped into China jumping from $42 a tonne in early May to $70 a tonne. So that was around the time that the Guinea mines came off as well. So that was interesting, I think. If bauxite is the new iron ore, then it's got a bright future going forward. And there was another article which talked about, I might skip that one and go on to the results because that's the kind of context for the company and the commodity. The results were good, FY25. So they expanded the Bauxite Hills mine and they boosted profit by 156.8 million year on year, which is I'll explain it in a bit of detail in a minute, largely due to a non-cash impairment being reversed. But revenue was up 78%, profit was up 424%, and shipments to Asia Pacific were up 27%. So the capital raise, I think they also did a debt raise at the same time and put into the business has worked, and it's put it on a good footing. And that's enabled it to reverse an impairment they had. So an impairment was taken out on the assets, which is basically the mine, last financial year, prior to the upgrades, because the accountants or the auditors felt that if they were to sell the Bauxite Hills mine, they wouldn't get what it's on the books for, so they had to take a write-down. However, after the upgrade to the mine, if they were to sell it today, the auditors are now quite comfortable they get above book value for it, and so they could write back their impairment. So there has been a bit of non-cash movement in the balance sheet over the last couple of years. But that aside, operating cash flow's up, sales are up, shipments are up. So it's been a pretty good year for them. What else can I say? Yeah, it's probably a much. Oh, here we go. No, I'll go through the numbers now. I'm sorry, I'm just jumping around trying to summarize some articles as we go, but I'll skip that one. The numbers, QAV numbers. The price is just under 7 cents, 0.069, which is less than IV1 of 8 cents and less than IV2 of 30 cents. So well under IV2, which is a bit unusual for us. IV2, that means is also 2 times share price, which we haven't seen in a pulled pork for a while, and is pretty rare on the balance sheet. So deep value that we're seeing if the forecasts for this company are true. So it's also 40% of consensus target, which is, again, pretty much unheard of. It won't be a company which is covered very heavily because it's a reasonably small cap. It does have ADT of $1.1 million though, so it will suit a lot of portfolios who are listening. But 40% of consensus target is deep value. We normally see things trading in the sort of 90% to 110% range. The company doesn't pay a dividend, so we can't score it for that. Stock Doctor financial health is strong and the trend is recovering, which is something I like. And that would be on the back of these upgrades to the infrastructure, which are working for them. Something I should say as well is that one of the tests for the impairment that they did was that they needed to make $7 a ton in the business, and it wasn't until they did the upgrades that they got there. So that's something to watch going forward. Is whether they're making $7 a ton, on their shipments or not. Because if they're not, then that'll start to trigger impairments, I would have thought again. But anyway, they are at the moment. Stockopedia ranking for quality is 83. Their F score is 7 out of 9, so that's both good. Overall score is 91. Again, very good. A metric that we don't use in our scoring, but I'll highlight, is return on equity, which is 96% in the latest results for this company. So that's huge. And we don't see that high usually in the stocks we look at. It's right up there. PE, contrastingly, is only 4.17 times. So it's pretty small. We only have one PE. It wasn't making a profit until now. So we can't score it for that, but it's still pretty low. Likewise, prop CAF is just under 6, so 5.92 times, which is good. Net equity per share, though, is only 3 cents, so we can't buy it for book or book plus 30. Forecast earnings per share growth is 82%, which means growth over PE is 19.6 times, which is a far cry above our hurdle of 1.5. So this is a screaming buy on value metrics. Probably the only point of hesitation is the bauxite price currently, anyway. But watch the space and we'll see what happens. Company doesn't have an owner-founder, and apparently Metro Mining emerged in its current form in December 2014 from the strategic rebranding and shift in focus of the existing entity Metro Coal Limited. So it was a coal miner, became a bauxite miner, and didn't really get into that meaningfully until about 2018, and after its upgrade has now turned profitable. However, it's been a buy in terms of its breadolator, its 5-point monthly graph, for more than a year. So the breadolator has it at about May 2023. It became a buy. So we can't score it for a recent 3PTL upturn. And we can't score it for 6 halves of increasing equity. The last 5 halves have been increasing nicely. So perhaps in a half's time, we'll see it score for that, but not currently. But even so, the quality score for this company is 13 out of 14, which is 93%. And the QAV score is 0.16. So it's one to keep an eye on, and particularly on the bauxite price. Not without its risks. It's affected by the wet season. And if they have a year of a bad wet season, that means less months that they can mine and ship, so that might affect them. They do highlight climate change in their annual report as a risk, and would probably second that, given that they're exposed to the elements in a more aggressive way than a lot of other mining companies are. So that's going to be an issue for them. That probably plays out the most in terms of being able to get at the surface to scrape off the bauxite, but also in this river depth issue for them. If there's lots of runoff, it's going to keep silting, and it costs more to keep dredging or getting different types of boats to accommodate it. Normal commodity movements will be the case, even though aluminium seems to be in a bit of an upswing due to its role in solar panel and EV construction. Following on from our question before, currency risk is still an issue. The business highlights the fact that, unlike a lot of our mining stocks, they're unable to hedge the bauxite contract. There's no market available for that. Now, that may change in time because financiers will sniff a margin if they can put together an options contract for a company like this. But at the moment, the Asia Pacific market is too small to do that. So they're exposed to currency movements. What else can I say? They are reasonably indebted. They paid off a lot of debt with the recent results, but they still have debt. So obviously interest rate hikes will hurt them. But on the strength side of things, aluminium is going up. And I like that comment in the article in the Financial Review about aluminium or bauxite being the new iron ore export to China. So if that comes to pass, then that really was a tremendous game changer for both the iron ore companies, but also for Australia, really, in terms of the boost to the economy that's provided. So we'll see what happens there. So have a look. Don't have to act straight away, but interesting company nonetheless.
Thank you, Tony. Bauxite and aluminium. I know their website says that aluminium is one of the most important materials underpinning renewable energy generation in solar panels, wind turbines, and transmission wires, and also in the bodies and batteries of electric vehicles. I wonder if it'll be a big part of humanoid robots. Think they'll be made out of aluminium?
Quite possibly. It's a pretty light, strong material, yeah. Anything that's got to drag a battery around got to be light, right? Because it's got to have a good weight to strength ratio.
All right. Good stuff. I haven't heard of these guys before. What did you say? MMI.
MMI,
is their share ticker code.
Mm-hmm.
Yeah. All right. After hours, Tony, what you got for me?